Gold and silver warning. Why April 2026 will shock you if you think gold and silver prices today make no sense. If you think markets feel manipulated, if you feel like the world is heading towards something major, then you're right, because something extremely unusual is happening behind the scenes. In the global precious metals markets, in the banking system, in industrial supply chains, and in government policy. Almost nobody sees it coming. But the data is there. The patterns are there. The warnings are there. And all of them point toward one single moment. April 2026. Not 2024. Not 2025. But 2026. A year that lines up with every major cycle in precious metals, every industrial supply squeeze, every banking liquidity deadline, and every geopolitical risk curve. This video is not hype. This is not guesswork. This is not fantasy. This is the deep dive analysis they don't want you to see. Because if regular people understood what was coming in 2026, they would position themselves very differently today. They would prepare. They would protect their savings. They would understand why the world is entering a once-in-a-generation reset. In this exposé, I'll show you why the silver run to $35 in October 2024 was not the top. Why the 19% pullback wasn't a collapse, but a setup. Why April 2025 quietly changed everything. Why governments worldwide are hoarding gold like never before. Why industries are panicking over silver shortages. Why April 2026 is the intersection point of multiple crises. The three likely scenarios for gold and silver. And what smart investors are doing before the shock hits. I'm Felix, and this is Mindful Money and Meals. Let's expose the truth together. Section 1. The silver pattern they missed. Let's go back to October 2024. Silver pushed up to $35 per ounce, a massive resistance level. Everyone thought, this is it, the moonshot, silver is finally ready. But then something happened. Silver didn't explode upward. Instead, it entered a slow, grinding correction. A 19% pullback from October 2024 through April 2025. Most retail investors panicked. Most YouTubers proclaimed the bull market dead. Financial media mocked silver investors again. But what almost nobody recognized was this. Silver wasn't crashing. It was coiling. This pattern has appeared multiple times in history. Before the 2003 to 2006 multi-year rally, before the 2010 surge to nearly $50, before the 1979 parabolic explosion. The pattern is simple. 1. Silver hits major resistance. 2. Pulls back slowly. 3. Builds a base. 4. Explodes violently once the coil unwinds. This is exactly what the October 2024, April 2025 structure was. A base building phase. And when silver stabilized around $28.34 in April 2025, that was not a sign of weakness. It was the formation of what analysts call a launchpad structure. A launchpad structure appears right before a multi-year breakout, and historically, that breakout tends to happen around major liquidity events, which leads us to the next section. Section 2, the secret 7-year monetary stress cycle. There's a hidden cycle in the financial system that rarely gets discussed, the 7-year monetary stress cycle. Every 7 years, the global financial system experiences a shock. 2001, dot-com bust, metals begin a multi-year rise. 2008, financial crisis, gold and silver explode. 2015, dollar liquidity squeeze, metals bottom, then rise. 2022, global inflation wave. Metals surge again. But what really matters is the half-cycle point, the midpoint of every 7-year cycle, 3.5 years in. At that midpoint, markets often undergo a violent turning event, a liquidity crunch, a credit freeze, a currency shock, or an industrial supply crisis. Guess where the midpoint of the current cycle lands? Late March to April 2026. This matches with Treasury refinancing cliffs, central bank liquidity rollovers, banking sector stress indicators, global manufacturing restarts, commodity supply bottlenecks, energy-dependent spikes, rising geopolitical tensions, election year volatility in multiple nations. This is not a coincidence. Cycles don't predict exact dates, but they do reveal pressure zones. And April 2026 is one of the biggest pressure zones in over 20 years. Section 3. Industrial demand, silver's new master. Here is the part of the story that changes everything. For the first time in human history, industrial demand for silver has overtaken monetary demand. More than 50% of all silver is consumed by industry. Why does this matter? Because industrial demand does not care about price. It only cares about supply. Let's break this down. 1. Solar takes over the market. Governments are mandating green energy transitions at record speed. Solar power is the centerpiece. Solar panels require silver. A lot of silver. Multiply 20 grams per panel by millions of installations across dozens of countries, and you get one thing: a structural, unavoidable shortage. 2. EVs and autonomous systems. Electric vehicles use 2 to 3 times more silver than traditional cars, and nearly every nation has EV requirements kicking in by 2026. 3. AI and data center infrastructure. AI servers, semiconductor manufacturing, 5G networks, and modern computing all require silver-heavy components. 4. Medical, military, aerospace, advanced tech, defense systems, guided weapons, satellites, all rely on silver. But here's the problem. Silver supply is not increasing at all. Mines are aging. No major new discoveries. Capital investment is low. Regulatory pressure is high. We are heading into a decade of declining supply and rising demand. That combination always ends the same way: explosive price moves. And guess when supply pressure peaks? 2026. Section 4. The banking system is hiding a problem. Silver's biggest moves don't come from demand alone. They come from financial crises. And right now, cracks are showing everywhere. US banks are sitting on hundreds of billions in bond losses. Higher interest rates crushed their portfolios. The problem is worse than 2008. European banks face 2026 refinancing walls, massive amounts of debt coming due at higher rates. Commercial real estate is failing. Office vacancies are at historic highs. Property values collapsing. Banks taking losses. Emerging markets are struggling with dollar shortages. This is always a trigger for gold and silver breakouts. Central banks are running out of tools. If they cut rates, inflation spikes. If they hike rates, banks collapse. If they do nothing, liquidity dries up. All paths lead to instability. And historically, instability leads to gold inflows, silver inflows, hard asset accumulation, derivative short squeezes. When confidence breaks, real money rises. Section 5. What governments know. If you want to know what's really going on, don't watch what governments say. Watch what they do. 1. Central banks are setting all-time gold buying records. China, India, Russia, Turkey, Poland, Hungary, Kazakhstan. They're buying gold every month without fail. 2. Industrial giants are locking in long-term silver supplies. Tech and solar companies are quietly signing multi-year purchase contracts. They know shortages are coming. 3. Registered silver inventories on COMEX are falling. Slowly, quietly, consistently. This is not retail selling. This is industrial withdrawal. 4. Mints worldwide report supply issues. Not enough blanks, not enough metal, not enough production capacity. 5. IMF releasing repeated global risk warnings. They're not explaining details publicly, but governments and central banks are acting first. Everything is pointing toward a moment of tension, a moment of stress, a moment of transition. And that moment lines up with April 2026. Section 6. 3 possible scenarios for 2026. There are 3 likely outcomes. Scenario 1. Silver breaks out to $50 plus. If inflation returns and liquidity weakens and industrial demand spikes, silver could break $35 to $40 to $50. This would be a multi-year breakout. Scenario 2. The temporary crash before the super spike. A banking shock causes investors to sell everything. Gold and silver drop briefly. Then liquidity floods in and metals rocket upward. This is what happened in 2008 and 2020. This scenario is highly likely. Scenario 3. The COMEX short squeeze. Physical shortages plus high industrial demand plus leveraged shorts equals a forced unwind. This is silver's ultimate wild card. If this happens, silver could do the unthinkable. $60, $80, $100 plus. Not because of hype, but because of a structural breakdown in paper markets. Section 7. How to prepare. This is not financial advice. This is what I personally would consider. 1. Buy during dips, not spikes. Silver always gives you multiple chances. 2. Hold physical. Coins, bars, rounds, not paper IOUs. 3. Gold as the foundation. Silver for upside. Gold for stability. 4. Mining stocks. High risk, high reward. Only if you understand volatility. 5. Diversify geographically. Don't depend on one country's currency system. 6. Stay educated. Most people lose money because they don't understand cycles. 7. Focus long term. The real money is made holding through corrections. Final message. The shock of 2026. April 2026 is not a prediction. It is the intersection of monetary stress cycles, industrial supply shortages, banking instability, geopolitical conflict, currency risk, election year volatility, derivative exposure, precious metal accumulation, debt refinancing cliffs, energy disruption patterns. The last time these conditions aligned was in the late 1970s. And what happened? Silver went from $5 to $49 in under 2 years. We are entering a similar phase again. History does not repeat, but it rhymes loudly. The window is closing, the storm is building, and the people who prepare early will be the ones who come out stronger. I'm Felix. This is Mindful Money and Meals. Stay prepared, stay alert, stay free. See you next time.